So here's the trick that I caught applying multiple time frame analysis. In this video I will teach you how to apply this trading strategy. We'll discuss how to spot safe entries, how to set stop loss and select the targets. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. In order to explain to you how to apply top-down analysis, we will discuss pound-yen pair. And when you apply multiple time frame analysis, remember that you always start with a higher time frame. There is a very common mistake among newbie traders. They start multiple time frame analysis from a lower time frame, from 1 hour, from 30 minutes short, and then they steadily go higher to daily and weekly. In practice, we do the opposite. We start from a daily and then we go lower. So on a pound-yen pair, we are on a daily time frame. And here our task is first of all to identify the market trend and then to identify key levels. How do we identify the market trend? We analyze the price action. We perceive the price chart as the set of impulses, as the set of impulse legs. And with that, we are trying to get where the market is going. You can see that right here, the market sets higher highs and higher lows. According to our rules, that is the classic example of the market trading in a bullish trend. By the way, if you want to learn my rules for the identification of the market trend, watch this video. There I explain in details how to identify the market trend. So in a pound-yen pair, we are trading in a bullish trend. And then our task is to identify key levels. Why do we need key levels? Because from key levels, we will look for trading opportunities. If the market is trading in a bullish trend, from supports, we will look for trend following trades, and from resistances, we will look for counter trend trades. How do we look for key levels? We just look for the points, the levels that were important for the market participants in the recent past. And we assume that in future, we will expect the same kind of reaction from these levels. You can see that here is our first resistance. From that structure recently, the market dropped sharply and we saw a very strong bearish movement from that. So we underline that. The next structure that we see is a very strong support right here. You can see that in the past it was quite strong resistance, and after the breakout it turned into support, and 1, 2, 3 times in a row it was nice to respect it. Then we also have a very nice support right here, and same rule, you can see that from that support in the recent past the market bounced sharply. And the last structure that we see right here is that low. From that low, this bullish trend initiated. So definitely that structure is very important. So we identified key levels, and you can see that at the moment the market is approaching a key support, a structure that we just spotted. So from that support we may look for buying opportunities because the market is currently trading in a bullish trend and the price is approaching support. What will be our next step? Can we open a trading position now from that support, or should we wait for something else? Remember, traders, that quite often the market breaks key levels, and for that reason it is very important for us to analyze the reaction of the price to that key level. And we can analyze the reaction of the price to key level on lower time frames. So let's open a 4-hour time frame and let's check how the price reacts to that. You can see, traders, that in a 4-hour time frame, here we got a very strong bearish movement. The market was falling sharply, but once our support was reached, the market stopped falling. The market stopped falling and we started to coil. First of all, the price formed a doji candle, and then you can see we started to trade in sideways. And analyzing the price action right here, you can see, traders, that we can even spot right here a classic reversal pattern, a double bottom. Here's our neckline, and you can see, traders, that right here we have a completed double bottom. But can we buy this pattern right now? Of course not. For now the price is trading below the neckline of the pattern. And in order to buy, we should wait for neckline breakout first. But also, traders, even though we have a reversal pattern right here, I always recommend to check even lower time frames and analyze the perspective there. So let's briefly take a look what is happening on an hourly time frame as well. Now we are on an hourly time frame, traders, and here we can see in details a double bottom formation that we spotted on a 4-hour time frame. But do we have something else right here? The fact is, traders, that if we analyze the price action here on an hourly time frame, we may spot right here that trend line, that very strong falling trend line that the price perfectly respected in the recent past. And if we take that low, we can spot one more trend line. So that you can see that right here, the market is trading in a bearish trend. The market is trading within that falling parallel channel, and while the market is staying within the boundaries of the channel, the market remains bearish. That is the main reason why we are not buying right now. It is still the market of sellers. But the situation will change as soon as the price breaks the resistance of the channel and our horizontal neckline of that double bottom. Only then we can say that we have a confirmed bullish reversal right here. So now we know what do we need to confirm a bullish reversal on pound yen. So it's time to discuss how exactly we will treat this bullish reversal. And the first thing right here is to decide which time frame will we treat. As you remember, we spotted a channel on an hourly time frame and a double bottom on a 4-hour time frame. And if we choose between two time frames, we always prioritize the higher time frame. Higher time frame is always more important. So this bullish reversal we will treat on a 4-hour time frame. So we discussed that we need a bullish breakout of the neckline of a double bottom and a breakout of the resistance of the channel. So in order to confirm a breakout, we will need a 4-hour candle close above them. Once we see a 4-hour candle close above, we will set our buy limit order on a retest. And our entry will be the highest candle close within the pattern. Stop loss will lie below the lows of the double bottom. And where will be our initial target? When we are looking for targets, traders, we should always look left at structure and we should spot the closest strong resistance. Where is our closest strong resistance? Take a look. Here we have a very peculiar structure. Yes, respected 2 times in a row, just in the recent past. So there will be our initial target for the trade. How about the second target? I always prefer to trade with 2 targets. So remember, we discussed that we are trading in a bullish trend and the market is currently approaching a major daily structure support. So probabilities are high that the pair will bounce all the way up to current highs. So there will be our second target. One more thing to add right here, traders, is that it is very important for us to protect our position. Once we are in a trade, at some moment I always move my stop loss to entry. Here I see also some peculiar minor structure. Yes, some peculiar minor structure right here that was also important for the market participants. Once the market reaches that level, my stop loss will be moved to entry and the position will become risk-free. So here is our multiple time frame analysis for a pound yen pair. First of all, we analyzed the daily time frame. On a daily time frame, we spotted that the market is trading in a bullish trend and that the price is approaching a key support from where the next strong bullish movement may initiate. Then we analyzed the 4-hour time frame, and on a 4-hour time frame, we spotted a double bottom pattern in the local indecision. Then analyzing an hourly time frame, we spotted that the market is trading within the boundaries of a falling parallel channel and that locally it still remains bearish. Then we discussed that in order to buy, we need a bullish breakout of the neckline of a double bottom and a bullish breakout of the channel. Only then we can open a long position. I hope everything is clear in my analysis, traders, and remember that if something is not clear, you can always ask me questions in the comment section on YouTube. I always reply. Also, traders, if you want to learn how to trade, if you want to see how we analyze the market live, don't forget to check my premium educational group, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.